In the ever-evolving landscape of finance, do you really know how to navigate these choppy waters?
That's why we've gathered insights from elite analysts like Danielle DiMartino Booth, Stephan, and George Gammon.
These AI-powered summaries compress hours of deep analysis into just minutes, saving you precious time.
Join us to explore housing market shifts, consumer trends, and economic forecasts that matter.
So, buckle up. First, let's hear from Danielle DiMartino Booth and her insights on looming recession risks. Today, we delve into recent economic analyses and their implications for investors.
We will highlight critical insights that investors must consider in light of current market conditions.
Current market fluctuations demand that investors rethink their strategies.
The landscape is shifting, compelling changes in investment approaches.
It is crucial for investors to stay flexible in their strategies.
Monitoring market changes can provide key insights for future investments.
Investors should consider diversifying their portfolios to manage risks better.
Being aware of economic indicators is critical for informed decision-making.
What trends should investors expect in the near future?
Market volatility is likely to continue, which may affect investment outcomes.
In summary, investors must remain proactive and stay updated with economic news.
Regular evaluation and adjustment of investments are key to navigating these dynamic conditions.
Today, we're discussing the current state of the housing market in detail.
Graham explains how rising interest rates put pressure on home buyers and affect the market.
Graham highlights that rising interest rates are raising costs for potential home buyers.
This makes home purchases less affordable, especially for first-time buyers.
He also notes that high prices restrict options for many buyers.
Graham indicates that inflation is pushing housing costs higher.
Buyers are increasingly affected as purchasing power diminishes. Graham suggests that investors should adopt long-term strategies in this volatile market.
Holding on to properties during market fluctuations can lead to better returns.
What does Graham see for the future of the housing market?
Graham predicts a possible stabilization in home prices in contrast to interest rate shifts. He believes challenges for first-time homebuyers will continue.
Graham implies that waiting for better market conditions may be prudent. In closing, Graham stresses the importance of buyers evaluating their financial situations.
He also advises watching for signs of market stabilization.
Patience may be crucial for buyers in today's uncertain market. Today, we're diving into George Gammon's insights on the collapse of two hedge funds and what it means for today's markets.
George emphasizes the systemic risks that have arisen in response to these market events.
George notes that the collapse of these hedge funds is a troubling sign similar to past financial crises.
He argues that we need to be vigilant about rising systemic risks in the markets. George discusses the problematic resurgence of risky investment strategies contributing to instability.
This behavior is reminiscent of the risks leading up to past market downturns.
What recommendations does George have for investors given these current conditions?
George urges investors to be cautious and to critically assess their risk levels in light of market volatility.
What are George's predictions about the market following these hedge fund failures?
George anticipates increased market instability and volatility as a result of these events.
In closing, George emphasizes the significance of learning from prior financial crises for future risk navigation.
He stresses the requirement for a proactive approach to managing systemic risks.
Today, we're exploring the economic trends impacting the real estate market with Emily Brown.
Emily discusses how landlords are adjusting their rental prices due to economic shifts.
Emily Brown points out that the economic indicators reflect notable shifts in rental pricing.
She highlights potential risks for both landlords and tenants in this economic environment. Emily notes that many landlords are compelled to adjust rents due to market pressures.
This adjustment reflects the changing landscape for landlords. What are the implications for tenants in this economy?
According to Emily, affordability for renters is increasing as prices adjust.
What does Emily anticipate for future rental markets?
Emily suggests that long-term changes in market dynamics could occur.
Emily predicts adjustments in rental prices could take place soon.
However, she warns that long-term stability is still a question.
Emily concludes that landlords must adapt to the shifting market.
Tenants, in contrast, should utilize current lower rents.
Investors must also be prepared for rapid changes ahead. Today, we're diving into consumer insights unveiled by Brady Haran from Eurodollar University and Verizon's latest findings. Haran emphasizes that consumer habits are changing swiftly, particularly with the growth of online platforms.
Indeed, Brady mentions that these changes are reshaping traditional retail dynamics.
There is significant pressure on businesses to adapt accordingly.
Brady Haran points out that a large percentage of consumers are now choosing online shopping, transforming retail.
That shift is considerable. Will traditional retailers struggle?
Precisely, businesses need to embrace digital transformation to compete.
According to Brady's analysis, consumer sentiment is crucial for predicting retail outcomes.
Indeed, when consumers feel uncertain, spending may decline, impacting the broader market.
Haran warns that changing consumer behavior could lead to increased volatility in retail.
Are we anticipating downturns as consumers adjust?
That's a valid concern. Investors need to be wary of emerging trends.
What predictions does Brady offer based on these consumer insights?
Haran suggests that if current trends persist, we might witness considerable market corrections.
So adapting to this new consumer landscape is key?
Exactly. Being proactive and observing these shifts is essential for investors.
In conclusion, Brady Haran's insights indicate that investors need to evolve their strategies in light of changing consumer behaviors.
Vigilance in monitoring consumer sentiment could provide a competitive edge in forecasting market trends.
Staying adaptable in investment strategies is likely to yield better outcomes.
Welcome, everyone. Today, we're diving into insights from Emily Brown on the current challenges facing equity markets.
Emily's analysis illustrates the significant volatility we're experiencing.
Emily Brown asserts that many indices are currently overvalued.
David Lynn agrees, noting that this overvaluation contributes to current volatility.
What does Emily say about the impact of rising Treasury yields?
Emily notes that as Treasury yields rise, it contributes to market pressure.
What are Emily's predictions for equity markets?
Emily predicts a pullback of 15 to 25%.
How does Emily forecast the market will perform moving forward?
Emily suggests investors should brace for ongoing volatility.
In conclusion, what does Emily recommend for investors navigating this market?
Emily advocates that investors keep a close eye on Treasury yields.
What a riveting discussion we've had today.
Indeed, each expert brought a unique lens on the current financial landscape.
Emily Brown really pointed out that we might see market declines of up to 25%. Quite shocking.
And Stephan had a more tempered view, suggesting that while it's concerning, the housing market is resilient in many ways.
There was also a strong emphasis on consumer behavior, right? Brady Haran really nailed how it can shake up the market.
Absolutely. And don't forget about George Gammon's cautionary stance on systemic risks emerging from current trends.
It's remarkable how these experts both agree on the volatility, yet disagree on the specifics.
It gives viewers a real spectrum of insights to consider as they navigate their investment strategies.
And for all our viewers, if these insights resonated with you, please give us a thumbs up and subscribe.
Your support ensures we keep bringing you timely and relevant financial analyses from experts.
Be sure to catch our next video, where we'll tackle global trade dynamics.
You won't want to miss that. It's crucial to understand how those dynamics will impact the markets.